Hey there, Jason Goebel with Faithful Insurance. I just wanted to take a little bit of time to do a quick video proposal for you, and also introduce myself, so you can put a face with my name. Again, my name is Jason. I've been in the insurance business since 2001, and I've been an independent agent now for 15 years. Independent agent just means that I have access to quote you with multiple insurance companies. That way I can make sure that I'm not losing clients due to price, and we're very competitive having multiple insurance companies in that. Faithful Insurance was opened up by myself in 2017. It is faith-based, hence the name, and our branding is loving people through insurance. One of the ways we do that is through education. So one of the things that I've noticed in the industry a lot is that people don't actually know what insurance coverages is for their auto insurance or their home necessarily. So I want to take a little bit of time to explain that to you so that we make sure that we're not just giving you a figure and saving you money, because that's great. But the last thing you want to do is save money and then something happens and you don't have enough insurance coverage, and then you're paying thousands of dollars out of pocket because you didn't have the right selection. So auto insurance is more popular in this, and that a lot of people, they just carry whatever the state minimum is, and then do what they say full coverage. Full coverage just simply means that you've got coverage for liability, which is what the state requires, and then you've got coverage for the vehicle itself. However, there are limits involved in liability, and it's extremely important to make sure that you have the right limits, because if you just have state minimum, you could be at a huge risk of having to pay a lot of money out of pocket. So without further ado, I'm going to get right into it. First, starting with auto insurance. Bodily injury is the first section. This is the most important part of the insurance, because again, this is the part that's protecting your total assets or net worth. If you're in an accident and you're at fault and the other party tries to sue you, these are the limits that you can select, okay? The state of Arizona only requires you at this point to carry $25,000 per person, $50,000 each accident. That is not very much coverage at all. So if you're in an accident and the other party tries to sue you and you only have $25,050, that means $25,000 each person and $50,000 total. So if there's more than two people in there, they wouldn't be able to do $25,000 3 times because it would exceed $50,000, right? If there's only one person injured, which is the limit you really want to kind of concentrate on, the maximum per person is only 25 grand. So if you've got more than $25,000 of assets, your insurance only is going to give you 25. So say goodbye to the rest. You just lost it because you didn't have enough coverage on the insurance. That's why this is very important. Even if you don't have any assets whatsoever at all, we're doing this proposal for you as an auto and home insurance, which means you've got now a new asset, or you've had your existing home and you've got assets on your home. So even though they can't take away your home, they could put a lien up against your house. So any positive equity could go to them. So you want to make sure that you protect that. So if you own a home, we recommend that you carry at least 100, 300. And then depending on what your income level is and asset level is, we would go up accordingly. So if you have a household income of over $100,000 and you own a home, we recommend you carry at least 250, 500. If you have a household income of over 150 and you own a home, we recommend that you carry 250, 500 and then add an umbrella policy on. The umbrella policy is separate. Typically, it starts at about $200 a year, so it's very inexpensive. Gives you $1 million worth of coverage in excess. So that means it'll blanket your auto policy and it'll blanket your home policy. Or if you have multiple homes, it'll blanket multiple homes, so that if somebody sues you, your initial policy would cover it. So if it was involving an auto accident, you'd have 250, 500 for the auto, and then you'd have an additional $1 million if somebody sued you on the umbrella. So you would have on the auto 1.25 million per person, or 1.5 million per accident. On the homeowners, which we'll go over here in a little bit, is typically 300,000 for the liability or 500,000, and the umbrella would be an additional 1 million. So you'd have either 1.3 or 1.5, depending on the limit you choose on the home. Then property damage, the state minimum is only $25,000. This is paying to the other party's vehicle. Well, there's not very many vehicles out there right now that are worth $25,000 or less. The value of the vehicles has gone up tremendously over the last couple of years. So you want to carry a little bit more. If we're doing a home and we're doing 100, 300 minimum, or 250, 500, you're going to have the 100,000, which is typically the max for the property damage anyway. So you'd have 100,000 in case you hit another vehicle. It would pay up to $100,000 in that. And then the next one I would go over would be uninsured and underinsured motorist coverages. So uninsured means that if you're in an accident and the other party is at fault and they have no insurance or could be hit and run, this is the amounts that they would protect you from. Now, when we're select a limit, we just match whatever limit we're giving you for bodily injury. So if you did 100, 300, we would match it. If you did 250, 500, we would match it. And that's going to pay you and anybody in your vehicle for pain and suffering, medical or loss of wages. Underinsured motorist means that maybe they have insurance, but they don't have enough insurance. So maybe they only have $2,550, but you have more than $25,000 in medical expenses. And the underinsured motorist would kick in excess of that. So even if they had $1 million umbrella policy and it still wasn't enough, this would still kick in because it's underinsured no matter what their limits are, up to the select limit that you have. And then comprehensive and collision. So this is the other section. So full coverage in insurance terminology, all it really means is you've got coverage for liability, which is required in the state, and then you've got coverage for your actual vehicle itself. So depending on how much your vehicles are, if you've got older vehicles that aren't as worth as much, you may not need full coverage. You just have liability coverage, and you could still have higher limits because the limits aren't varied based on the value of your vehicle. It's based on your assets. But if you have a lien holder on your car or the car's worth at least $5,000 or more, we would do full coverage on it, physical damage coverage. So typically the deductibles are either 500 or 1,000. Comprehensive is going to be anything other than a collision. So things like weather, theft, or if you hit an animal is also considered comprehensive. Glass coverage is also considered incomprehensive, but even if you have a deductible, if you've got what they call glass coverage or glass waiver deductible, just means that there's no deductible, so your window's free if you select that coverage. Collision coverage would be if you collide into something. So if you hit something or something hits you, that's going to be collision. If the other parties hits you and they have insurance, then their property damage would cover you. You wouldn't use your collision for that. So if you're involved in an accident, as a side note, and the other party's at fault, you always want to contact their insurance first, if possible, so that you're not having to pay out-of-pocket expenses on your collision deductible. If for whatever reason you can't get a hold of them or they're not playing nice or taking too long, you can report the claim to us. They'll report it as a no fault, and typically what would happen is you'd pay your deductible upfront so that we can take care of it, but then we would go after the other insurance company and eventually get the money. And once we receive the insurance company receives the money, we would give you that money back for your deductible. So if you had $1,000 deductible and we had to take care of it, you paid $1,000, but then we would compensate you if we're able to get the money back and recoupment from that other company. That's pretty much it for the auto insurance. So let's get into the homeowner's insurance. So on the homeowner's insurance, it's important to let you know that we are insuring your home for the rebuilding costs. We're not insuring for the market value. The market value can be crazy. And we're only insuring for the actual dwelling structure. We're not insuring for the land. So when you're purchasing your home, you may purchase your home for, let's say, $500,000, but we may be only insuring your home for $200,000. And the reason why there's a huge difference, again, is because of market value and because of the land value that it's on. There's also an endorsement that we typically do what's called extended dwelling coverage. So I'll give you an example. Let's say we are insuring your home for $200,000, but we give you extended dwelling coverage. Typically, we do give you extended dwelling coverage at 50%. Sometimes 25%, but I'll use an example of 50%. If we are insuring it for $200,000 and we give you 50% extended, that means we're actually insuring your home for $300,000 because you're getting an extra 50% on that. So if we add insuring it for $300,000, then it would be an extra $150,000. We would be insuring your home for $450,000 at that point, and so forth. Personal property is going to be any of your personal property protection. So your clothes, your food, your furniture, electronic devices, and we always do replacement cost value. So we would replace that at brand new, like, kind, and quality. Loss of use is going to be If let's say there was a kitchen fire and you couldn't live at the home, you're still paying for your mortgage. We're going to put you up in like an Airbnb or a hotel for a certain amount of days, and we would pay for that up to whatever the value or limit is on your policy for loss of use. Your personal liability coverage, again, we talked about that. If somebody came over, they got injured and wanted to sue you, we would pay up to whatever the liability limits. We usually do 300,000 or 500,000 on this. And this is also covering you worldwide off-premise. So I use the example of, let's say you're playing golf, you hit a golf ball, you hit somebody in the back of the head by mistake, and they want to sue you, your liability policy would cover you. Medical payments, this is the part where it's third-party coverage. So let's say somebody comes over that gets injured, instead of suing you, we can help compensate for their copays or deductibles. We usually just do the 1,000 on this. Because I mean, you could do 25,000 for higher premium, but at the end of the day, if you only have $1,000 and they want more, they could always get it from the personal liability section on that. Deductible for the homeowners policy deductibles, I typically recommend $1,000 deductible is typically the minimum deductible on homeowners policy. If the premium on your home policy is over $1,000 with a 1,000 deductible, I normally recommend doing a $2,500 deductible. And the reason why is it typically 9 times out of 10, you're going to win that bet. With insurance, it's kind of law of large numbers. And if you go with, let's say, a $2,500 deductible and your price is over $1,000, you're typically going to save around $200 or more sometimes on the insurance. So normally somebody files a claim once every 10 years on their own homeowner's insurance. So if you're saving $200 a month times 10, that's $2,000 that you would save over time. So you'd end up saving more money by having a higher deductible going with it at that point in time. Other structures is going to be anything detached from your home. So if you have a fence line, obviously would be covered in that. If you had a detached storage shed or a detached storage garage or a casita, we would probably want to increase the limit to cover that, because typically the other structures would give you an automatic coverage up to 10% of the dwelling. So in the example of 200,000, this would be at about $20,000. Loss assessment would be if you lived in an HOA area, we could provide you coverage for the HOA assessment. So let's say the HOA is wanting for you to pay $1,500 for painting the walls in the area. That's as an example. So we can add that on there. Sewer and water backup is pretty popular coverage as well. So typically give a quote with or without it. And this is just going to provide you coverage if there is a backup from the sewer line outside of the house and it goes inside and makes a mess and overflows your toilet or overflows your sinks or anything like that. If it's caused from the sewer line and damages your carpet or your tile or your drywall, we could have coverage on that. Typically, the coverages are between $5,000 and $25,000, and the prices reflect that accordingly. If it's not a sewer backup, but let's just say you had a pipe burst or your toilet overflowed for whatever other reason, but it wasn't from a sewer backup, that's covered in the policy without this endorsement. Okay. We talked about the personal replacement cost. That's pretty much it on the homeowner's policy. So without further ado, I will get this sent out over to the proposals. I appreciate your time in watching this video, and let me know if there's anything else I could do for you. Thank you.